In this presentation, we're going to continue on with the customer section, looking at the form of receive payment within QuickBooks Online. Here we are on the dashboard of the free QuickBooks Online test drive, which you could find by Googling QuickBooks Online test drive for Craig's design and landscaping service. We're going to jump over to the desktop version to look at our flowchart once again. So this is the desktop version, just looking at the flowchart for it. In the prior presentation, we created the invoice. That's going to be the bill to the client. And you can kind of assume that or think of that as basically like a law firm or something like that, where we did work and then we billed the client. Then we expect to receive payment. So we sent the bill out, which is the invoice, sent the invoice out, which is the bill to the client, invoice to us. Then we expect to receive payment. You can imagine getting a payment in the mail. That would be the next step in the process. So what's going to happen on the receive payment? Let's go back into QuickBooks Online. So we're going to go into QuickBooks Online and we're going to be considering the receive payment item. So I'm going to say the plus, well, first let's open up our financial statements, and we're always going to want our financial statements open, and we're going to get used to basically going through this process and having a couple tabs up top with the balance sheet and the income statement or profit and loss. So I'm going to go down below. I'm going to open it up with the reports. I'm going to have our favorite reports, which should thoroughly be in the favorite reports because we will be using them a lot. Of first, the balance sheet. So let's open up that balance sheet. We're going to be changing the dates up top from 01/01/20 to 12/31/20. So January through December 2020. Then I'm going to run that report. So we'll run that report. There it is. Now I'm going to make another tab. I'm going to duplicate that tab so that I can have the balance sheet up top and always be bouncing back to that balance sheet. I'm going to right click on the tab up top. We're going to duplicate it. I'm going to duplicate that tab. And there we have it. Now we have the duplicated balance sheet. I'm going to do the same for the profit and loss report. I'm going to go back to the first tab. I'm going to scroll down to the reports once again. I'm going to pick up the other report that's probably in the favorite reports here. It should be, because we should be using it a lot. We're going to look at it a lot. I'm going to change the dates back up top. It's going to be going from 01/01/20 to 12/30. That's not 30. 31/20. Then I'm going to run that report. Now, once the report's run, I'm going to make a new tab on this one as well. So I'm going to right click and I'm going to duplicate that tab. Now we have our profit and loss in our balance sheet. Now I'm going to take the profit and loss. I'm going to drag it to the right. I'm going to left click on the tab up top and drag it to the right because I like to see it on the other side. So there's going to be our information. Now, last time we entered the invoice, you could find that if we're on the income statement. We could find the invoice that we had entered by zooming back into it, by going to this invoice and clicking on it. And if we go back into it, there is the invoice that we made last time on January 1st. If I click on that invoice, then it'll take us to the invoice that we have then created. I'm going to make this a bit smaller. I'm holding down Control to zoom out now. Back, I'm at 110. So this was to Amy's Bird Sanctuary, and the amount was $1,000 plus sales tax of $80, $1,080. All right, so I'm going to close this back out. And I'm going to go back to our reports up top. I'm going to go to the right, back to the report summary. That'll take us back to our profit and loss report. Now we're going to say we received payment on it. There's a couple different ways you can go to the receive payment. One of the most common ways with any form is to go to the plus button here and then go to the receive payment. However, it might be the case, I'm going to close this back out, that you want to go to the sales item down below. And you're going to basically be considering possibly invoices or customer. And if I go, for example, to the invoice tab and I go through the invoices that have been generated, I can then have a listing of those invoices, and I can have the receive payment on the right. So I can go to the form in that format. So if I scroll down, notice it's in order by the amounts that are past due. So this is overdue, 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 and so on and so on. And then if I scroll down, here's the one that we just made that's not going to be due for a while, and you can go to the receive payment in that format. So I'm going to go to the plus button up top though, because I'm going to go to the plus because this is where most of our forms will be. I'm going to go to the receive payment. So we're going to get a payment now, and I'm going to select that item, and then I'm going to type in the customer. You could select the drop down to get to Amy, or you could type in Amy. And it'll start to populate, right? And once it starts to populate, then you could select the correct item and tab through. So I'm going to say the payment date is going to be January, let's say, 5th. And then the payment method, I'm just going to say is a check. So these are the different methods we can receive. I'm going to imagine that we got a check in the mail, and then it's going to be going to the deposit to undeposited funds. Now, the undeposited funds is kind of the default that we would have when you receive a payment, because you could put it directly into the bank account, the checking account. However, we're imagining here that we're going to get more payments than just the one from Amy in a day, for example, then go to the bank with all of those deposits at one time. So, and that's why you want the undeposited funds, so you can match them up as you go to the bank and deposit them all in one group setting. So then we're going to scroll down and we're going to say that we received this one. This is the one we made. You'll recall there's the invoice. Notice it ties it out, because if I click on that invoice, it'll actually open the invoice up. That's the one that we're selecting. Then I'm going to select that item on the received payment. Going to have 1,080. It's possible I could have got paid for something other than that. Let's say she made a down payment or something of 500. Then of course there would be an amount remaining after that point in time. Now the received payment, when you see the received payment, what you're going to imagine then, what you think of in terms of journal entry is we got the payment. That means cash is going up, but not cash the checking account, because it's not made it to the checking account yet. Instead, it goes into undeposited funds, which you're thinking it's in a drawer. It's in the cash register. It's not in the bank yet. It's going to be in the bank when we go to the bank at the end of the day and make the deposit. Therefore, it's in kind of the holding cash account, undeposited funds. And then the other side of received payment is always going to be decreasing the accounts receivable, because the received payment is basically almost always linked to an invoice. And the invoice increased the receivable, saying that the customer owed us money. That's the account saying they owe us money. Now we got the money. Therefore, it's going to be decreasing the receivable at this point. So let's go ahead and save that and see what happens. We'll go take a look at the reports. I'm going to say save, save and new, and then I'm going to close this out after it's been saved. I'm going to X out of this item. That'll take us back to our desktop or our dashboard. I'll go up to the dashboard on the left. And now I'm going to take a look at the report. So if I then go to the balance sheet report, I would think that one side would be the accounts receivable went down. The accounts receivable should be going down, because that represents people owing us money and they paid us now. If I select the accounts receivable on the balance sheet, then you'll see the two things that are affected. We have the invoice here increasing. If I go to the right, the invoice increased, and then we got a payment. And the payment is labeled as the form type payment. So QuickBooks sees it as the form called payment. Payment means it's a form. Data input form for payment. And if I go to the right, then it's going to go out. And that's going to be the common type of characteristic we would expect to see in an accounts receivable account. It's going to go up with an invoice and down with the payment on it. And so if I select the payment, then of course it will take us to that payment screen that we had, and that payment screen having the payment of the 1,080. Closing this back out, and then go into the other side of things. Let's go to the other side. I'm going to go to the right. I'm going to scroll back up, and I'm going to go back to the report's summary. And then I'm going to go to the undeposited funds. Here's undeposited funds. Now this is, it's not up here in the cash accounts like you would kind of expect it to be, because QuickBooks doesn't want to track it as a bank account, basically. So even though you could think of it as basically a cash account, because it represents money you're holding in your hand that's not in the bank yet, it doesn't want to be tracked as a bank account, because QuickBooks uses the tracking differently when it's being tracked by another institution. So therefore, it's under the other current assets down here, but it's basically cash. And if you select that item, we then have the undeposited funds. So here's the undeposited funds. It went up. Now, if you see undeposited funds, there's our received payment. You're going to think that you should be imagining that you're holding on to cash, or you're holding on to a check in your hand that you expect to go to the bank with. And this is often the area where people kind of get messed up with, is this undeposited fund component. But you're imagining that you're going to go to the bank. And then, of course, the next step is going to be the deposit, where we actually go to the bank and make the deposit. Now, what's going to be the effect on the profit and loss statement? You would think, hey, we got money. Shouldn't there be an effect here? No, there's not, because we already recorded the income here when we sent the invoice out. That's the accrual accounting method. So the accrual accounting method would record this. And if you have and you want to track accounts receivable, then you kind of have to have an accrual accounting method, because the accounts receivable account in and of itself is also an accrual account. If you're getting the money at the same point in time, like we said with the flow chart, like you have a food truck or something like that, then you don't need to deal with the accounts receivable, and the accrual method and the cash method would be similar because the time of payment would be the same as the time that you did the work, and you would be using a sales receipt as opposed to the invoice. And I jumped back over here to the desktop version to see the flow chart, so you can see that, by the way, just so you know. We're not in the online version here. So next time what we're going to do is we're going to say, all right, now we got the sales receipt, now we got the money, we got the check. We're imagining the check in our hand. Next step in the flow is that we take that check along with any other checks in our cash register and whatnot, and we go to the bank with it, and we make the deposit. When we make the deposit, we'll group all the money that we have together at that point in time so it appears on the bank statement in the same format that it will appear in our QuickBooks Online.